everybody. Happy Friday. I think it is Friday, right? As I mentioned in the rooms, everybody, we are waiting to see if the president speaks. If he does hop on here shortly, we will probably, hold on. Now that I'm looking up here, it looks like he is, I don't know, maybe about to walk out. They've got the cameras there waiting for him. But meanwhile, let's get this back on the screen here. And how's everybody doing? All right. The Dow turned positive. It was down about 160 points, I don't know, 45 minutes ago. Dow is now positive. S&P's up 31. The NASDAQ is up 170 plus points. Certainly not the reaction in the markets that myself or many people would have thought, given the SCOTUS determination today. Just know, guys, that if we talk about the tariff decision from SCOTUS, we talk about President Trump's remarks right now, none of this is political. This is all just market related. Okay? Just remember that. So, yesterday we did a lot of, and I know my pen, I was on my laptop, wasn't great. We did a lot of math yesterday. Let's continue it today, and then hopefully we can wrap up kind of the put call parity today before we go into adding in dividend or interest rates. Okay? So how can we, I should say, create a long call position by using puts? I mean, it's right there in front of us, right? It's not a trick question. Thank you, Kevin. Hey there, Tony. Okay. So we are going to talk about this. So if we get into a situation, okay, for whatever reason, we look at our put call parity and the extrinsic value in a call is more expensive than the extrinsic value in a put. And I want to have a call position because I think the stock is going higher. Let's look what we can do. Okay, so I am going to, I know we used the cues yesterday, and I keep looking up at my TV because I'm just waiting for President Trump to come onto the screen. Let's use, I'm looking for something that is kind of right at the money here, which would be a good example. Let's use Coinbase. Let's use Coinbase. Okay. Coinbase trading 170. Next week, we're going to focus in on the 170 call, the 170 put. Okay. Now, I'm going to fudge the numbers here a little bit. Okay. I'm going to fudge the numbers here a little bit. Let's say the call is 675 and the put is 630 with the stock 170. Actually, I'm gonna let's say the stock is 170.10. Okay, give a little bit maybe more difficult of an explanation here. Okay, so those prices that I have written on the screen, 170.10 in the stock, 675 on this put, 630, or excuse me, 675 on the call, 630 on the put. Does everybody see why the call is more expensive than the put? It has nothing to do with 675 and 630. Because remember, it's all about the extrinsic value, right? The extrinsic value. So what do you guys all see there before I put up some numbers? Patiently awaiting the president here. Anybody? Okay. Well, what is the extrinsic value in this call option, everybody? Well, ugly man, the VWAP can be very important. It doesn't play into put call parity, but it definitely can be very important. Okay, extrinsic values are different. Great, AJ. How much extrinsic value is in this call? Okay, 665. Okay, AJ, I'm not sure what you mean by 652. Remember, we're using these prices that I wrote on the screen here. So at 170.10, that call is 10 cents in the money already, is 10 cents of intrinsic value, which means that the extrinsic value would be 665. Okay, everybody got that? Hello there, Bushman. We've got Bushman in the house. We've got Ugly Man in the house. Love it. Love it. Love it. All right, does everybody understand about the 665? Extrinsic value. Okay. Now, since the 170 put is out of the money, all of that is extrinsic value. So just by looking at the extrinsic value, we can see all else being equal. Okay. All else being equal. Hey, Kay, this call is more expensive than this put. Okay. It's more expensive by 35 cents. But I want to own the call. I want to own the call. I want to have that position. I want to have that exposure. Okay. So why would I buy the call when I synthetically can create the same position using the put? So let's go through the deltas first. Okay, so we've got a 52 delta on the call, and we've got a 48 delta on the put. So if we just buy the call outright, we got 52 delta position. Okay, if we buy the put and we buy 100 shares of stock, we have the same 52 delta. Does everybody see that? From the delta standpoint, the position standpoint, exactly the same. Okay, now let's look at the dollars and cents. And actually, before we move into that, I'm going to go one layer deeper here. Is there a difference in volatility in the position of whether I own the call outright or whether I own the put in stock? If something happens to the implied vol, is that going to impact one position more than the other? Not sure if you guys will be able to hear this, but all right, were you guys able to hear that? Trying to get a little levity in here while we're waiting for the president. Not sure if you could hear the music playing or not. Okay, no problem then. Okay, so we've got the exact same delta 52 on one side, 52 on the other. Okay, now let's look at the pricing. Okay, 170 call. Okay, the 170 call we said was what was it, 85? No, it was 675. Okay, it was 675. Thank you. Being 10 cents in the money. If I take the 170, okay, and pay 635, okay, what kind of cost do I have? $176.35, 176.75. Okay, and if we go back to our equation, remember all those equations we were looking at yesterday? Okay, and we're isolating on this. Okay, this is just a derivative of that, right? Because starting with this, understanding that this is correct from a cost standpoint, a delta standpoint, whatever it might be, looking at it algebraically, we can come up with any of the other positions. Does everybody understand that? James, I would say stock is 100 delta. Because what you have to remember is every option is the equivalent to 100 shares of stock. So put it as 100. Okay. Now, This works in a perfect world where there's no dividend and where the risk-free rate of return is zero or close to zero, where it doesn't cost us to borrow money to buy stock. If you buy stock in your position, you will get charged an interest rate from your brokerage firm. So, what is assumed in these calculations here is a zero rate of return. We know that is not real. There is some real interest rate. Okay. So, we do need to factor that in, but that is a conversation to continue on Monday, as well as if there is a dividend. Our put call parity explanation equation that we have here will not hold. So what I'm going to put up here right now is Little Lou giggles, and we will get a couple spins today because we did not do that yesterday. I keep looking up here on the TV like, something unbelievable is going to happen here. Like, come on already. Where are you, President Trump? You're a half an hour late. All right, we'll give this another minute here, guys, before the wheel closes. And then we'll continue next week on how dividends affect this put call parity thing. Oh, ugly man, you got to write it out. That's our word of the day for the wheel. Get a chance at some swag. All right, S&Ps going into the president here are now up 20. Not looking likely that we are going to get SanDisk or SMH. And look at this, everybody. Remember how we exited net yesterday? Look at that. All right. Wheel is officially closed. I am just waiting for that to pop up. All right. Just about have it here. Wheel is closed. There it is. Ooh, we're going to have to change these colors next week when the Olympics are over. They've been so good here. All right, let's get right to it. First spin of the day. We're going to do two of them today. First spin of the day. Winner is Justin E9V1M. Justin E91VM, are you in the house? Yes, he is. All right. We got one winner on the day. Beautiful. Let's remove you so you don't win again. We'll give one more spin. One more Olympic spin. Next one, SnowX Trading Den. SnowX Trading Den. Trading Den in the house. I know you are here. There we go. Speaking of the Olympics, how about the women's hockey team yesterday? Let's hope the men can replicate that. And Michaela Schifrin. All right. Trump is speaking right now, guys. So we are going to sign off. Alyssa Liu also with the gold. Everybody have a great weekend. We'll see you on Monday. President Trump is on right now.